All right, welcome back. It's time for this week's financial forecast, delayed from Tuesday because of the rain and all the flooding. I've got Tim Fitzwilliams from Fitzwilliams Financial here with me right now. And Tim, you know, this is just a wild time to be speaking with you because July in itself was kind of all over the map here.
Yeah, it was a little wild and crazy. You're driving down a highway and fog sets in. And even the people that do this on a regular basis like us, it's still foggy. You don't know where to go.
Right.
And all this happened over AI hype is how it turned out.
Well, an AI hype is the whole thing here. I mean, you were talking to us off camera that this kind of all happened because a 20-year-old who was able to kind of control the market here in that way. What do these kind of instances really speak towards as to how the market is moving in a whole with AI coming onto the scene here?
Yeah, I mean, that's a great question. First off, we got to look at the fact that this person from OpenAI in their 20s created a fund, and then they had a 4 or 5 times leverage. So in the beginning of July, they had $45 billion. By the end, it was $10 billion. And then that's when Citadel stepped in and bought them out. But you got to think, why did it fall? Because it was over leveraged. And well, why did it get over leveraged? Because too many people were believing in the hype. But at some point, the rubber hit the road, and they're like, wait a minute, I need to pull back. But what's sad is that when things go south in some type of investment like that, it can affect everyone else. Because when you're leveraged, you've put up collateral. That collateral are the normal stocks and 401ks that everyone has, right? It's the same stuff. And so when that stuff gets called and you've got to pay the piper, so to speak, you can lose value in your TSP and your 401, and you weren't even involved in the AI hype.
Especially because people have so much trust and so much faith in so many of their programs that they're now investing that money in. But I think another curiosity here is that it all kind of happened so quickly. Can you speak to the expediency of how quick this happened as well?
Yeah, so it happened in the course of the month of July. And I think just people woke up. Once you hit a certain level of leverage, I think people are like, wait a minute. And really a lot of this happened not to be confused with insider trading, but there's insider news. Look, if you're on Wall Street and you're going to dinner and coffee, you're going to have coffee and dinner and lunch with people that are also on Wall Street. So people started talking and they're kind of like, wait a minute, 4 or 5 times leverage? So some of those funds said, wait a minute, we're going to get ahead of that and start shorting it, right? Then as that started, a steamroll effect occurred and people are very opportunistic. Very opportunistic. And so they dove in trying to make as much as they possibly can as this thing's falling to the point where it fell all the way down to the 10 billion.
Well, right. And falling to that amount, it's wild to hear, but we appreciate you taking a second out of your day, especially later in the week. We know the rains kind of switch things up, but thank you. Thank you so much for making some time. And as always, you can catch the financial forecast every Tuesday in our 4 p.m. news. If you've got any questions that you want answered by our expert right here, email the financial forecast at 13newsnow.com.